So Kathleen, your take on it?
Well, actually, widening the yield curve control band is big news. They were not expected to make any kind of a change like that at this meeting, and it's a kind of a technical thing. But the BOJ has 4 meetings a year where they have a monetary policy report at the end of the meeting, and 4 where they don't. When they don't have any kind of monetary policy, they report coming out. They don't usually make changes. I think this is significant. It seems to show that, yes, they are starting. Even before Governor Kuroda leaves office, April 8th is his last day. By then we'll know who the new governor is going to be. Ahead, that there's some need to be a little more flexible with that yield curve control target, because if you make it more flexible, that means you're going to give your benchmark 10-year JGB a little more room to rise. And that's what the BOJ was fighting so hard this past autumn when it bought so many bonds on so many days in a row in that month when it was really the worst of the weakening yen. And now they're going to have a little more room to deal with that. And they're going to increase the purchases of bonds they're doing in the first quarter of this coming year. So I would say this is very significant. They're saying they need to watch the foreign exchange, the market's impact on economy and prices to see how this all goes. And what the thing is, it's interesting, too, though, that they're talking about seeing inflation at 3.5%. They're probably talking about their core CPI, which takes out raw fruit prices or fresh food, I should say, and that is right now the core rate is at 3.6%. The headline rate is at 3.7. And one of the reasons that the BOJ doesn't want to make any kind of bigger move before Governor Kuroda steps down, maybe on being more flexible on inflation, is that they think that yes, it's rising now, but next year it could stop rising, it could pull back a bit. It's not necessarily sustainable. It's a lot due to import prices now, and in fact they are concerned that with the Fed hiking rates, maybe we get a U.S. recession and a global recession, and then that also takes pressure off prices. Down the road, we'll see how they do this. But bond market functioning declining, that's another big headline, because they have sort of pushed back against the idea that all their purchases of bonds were making it more difficult to trade in the secondary market, more difficult to do yield curve control. But now they're at a point where they're stepping up and doing that. Continue aiming for the price stability target. They're not moving that yet. A pretty big meeting, I think.
Kathleen, I mean, a huge move by the yen. I mean, we're talking about a 1.5% appreciation against the dollar just in the last, 2 minutes or thereabouts, as you've been talking. I mean, this is, as you said, a very, very big change, even though it can be seen as being quite minute. But given their conservative nature before, it is huge news.
Well, again, you've got, we're talking about trillions of yen. We're talking about big purchases. We're talking about a very important currency on the world stage, a very important, there are 3 big central banks, the Fed, the ECB, and the Bank of Japan. This is something that's going to resonate, reverberate around markets around the world. But it's interesting to me because so much of what we've heard from the BOJ is maybe we can start looking at, or they're acknowledged, say, the policy review that could happen after the new governor is appointed and in place in April, that's something where they could look at yield curve control and look at flexibility on that inflation target. But now they're taking a step that's already seeming to show that they're moving in that direction. I think this is a surprise to most people. People were saying it could happen, but all the signals from the Bank of Japan so far had been that it wouldn't. This is significant.